Hello everyone, welcome back to the channel, Epic Finance. It's so good to be back with all of you. I hope you've all had a great week, and I'm really looking forward to this week's video. Super excited to be teaching kind of, what the stock market is to a lot of you guys out there that might be new to the stock market and maybe don't even have an idea of what the stock market is and why you should be investing your money, things like that. And I'm not going to cover everything in this video. I do plan to make more videos explaining some of these basic questions that a lot of new people have. As I mentioned in my previous video, there was a couple of younger people I was talking to, and they asked me some of these basic questions, and I thought, well, maybe I should make a video explaining this, because I remember when I was there and I didn't have anyone to explain it to me. So that's what these videos that I'll be making coming up will be about. But before we get started, I do just want to do a quick update on my Robinhood account, because it was an investment week, on the stocks that I have invested in and the current balance of my portfolio. So I'm going to go ahead and shift the screen here and put up some images to my right, about right in here, and yeah, let's go over that. Alright, so hopefully I've made enough room here for those images. So if you can look off to my right, you'll see my Robinhood portfolio, and the current balance is sitting at $976.30 as of today, and I've invested the $50 deposit into 4 new shares of VGR, each paying me 40 cents a share. So that brings my new yearly income to $109.28, and yeah, it's pretty good investment week. By the end of the month, I should have most of my monthly income up to $9. So yeah, super exciting. Now let's get on to the topic. I'll go ahead and readjust my screen, and we'll get into the nitty-gritty details of what is the stock market. Okay, so the stock market, it's basically a entity that is made up of all of your major companies and smaller ones as well, but most people will know companies like Apple, Microsoft, Verizon, AT&T, companies like that, and they are there to make money. That is why they get involved in the stock market. Not only are they looking to make money, but also raise money. So they offer something to us, the consumer, to try to have us basically kind of give them the money that they're looking for to do what it is they are looking to want to do. So when they offer what they are going to offer on the stock market to raise more money, what I'm going to do here is use pizza as an analogy. All of us are very familiar with pizza. We all love pizza. So what these companies do is they offer up slices of pizza, and we go ahead and we invest our money into buying those slices of pizza that these companies are offering. So each slice of pizza is what's called a share. Now, a share is a slice of the company. So let's take Apple, for example. And so Apple offers up a piece of itself for us, the consumer, to buy. We invest our money into buying however many slices of this company that we want to buy, and they use that money to go ahead and grow and do things that they want to do to try to give us some return. And at the same time, they are also making a return off of new product or expansion that they can achieve with the money that we give to them by investing in these slices of the company. So in essence, when you invest in a slice or share of the company, you are buying a little piece of that company, and they are promising to basically grow and to do the things that they want to do to help bring in more money, so that way they can bring you better products. So in this analogy, we'll go ahead and say Apple is like pepperoni pizza. Everyone knows pepperoni pizza. It's tried and true. We all love it. And we all, know that that is a safe choice for our money. So being that pepperoni pizza is such a tried and true method, they can go ahead and sell that slice for a higher price than a pizza that, most people probably wouldn't buy. So let's just go ahead and say that Apple here, or our pepperoni pizza, they're selling their shares for, $1.50, and $1.75. Let's go with that. So they're selling their slice of pepperoni pizza for $1.75 per slice, and there's another company off to the side, and they're selling, let's say, tomato slices on pizza. So they're putting tomato slices on their pizza. It's not as popular, so they're only able to sell their slices for $1 per slice, because most people, they're not gonna want tomato pizza. It's not as tested, not as tried, and so they're not able to sell it for as much, because it's not worth as much. So it's a lower cost. Then you have companies that are kind of, bringing up new ideas. They're not as popular, they're not as tried and tested, and they're looking to make some money. So let's say this new company, they're putting, strawberries on pizza. So they're gonna go ahead and they're gonna sell strawberry pizza, and they're not really sure how it's gonna go. It's not as tried, not as true as pepperoni. So they're only able to sell their pizza for 50 cents a slice. And that's, typically an indicator of the risk factor in a stock. The cheaper it is, usually the more riskier it is, because it's a newer idea, or it doesn't have as much backing behind it, and it's a little bit more of a riskier investment. But with the stock market, it's can change and fluctuate daily. Nothing is set in stone, and there's no guarantee that one stock is going to be worth the same amount as another stock. It's a lot more difficult with those stronger companies that people are always going to be looking at, wanting to buy into, like Apple. But a lot can affect the market, anywhere from news articles to somebody saying something, things like that. And it can change quite quickly. So there is that risk factor when you are investing your money in the stock market, which is why typically you are going to want to find those stronger companies to invest into. So that brings us to our next question is, well, how are we, the consumer, going to be making money in the stock market? We know how the companies make money. They offer up their slices or shares to us, the consumer, to buy. But how do we, the consumer, make money in the stock market? Well, let's say that we go ahead and we see that strawberry pizza, and we're like, that's going to be the next big thing. That's going to be, everyone's favorite pizza. So we go ahead and invest our money in that strawberry pizza. That same pizza is then featured soon on, let's say, the Food Network channel and, some news outlets, and it's the greatest thing since sliced bread. Everyone is raving about that strawberry pizza. And so that 50-cent price jumps all the way up to $2.50 and 50 cents a slice. So now everyone is like, well, that's a great buy now. So everyone's starting to buy that slices of that strawberry pizza, but instead of paying 50 cents now, they are having to pay $2.50 for that slice. But we, who had bought it for 50 cents per slice, well, we're like, well, it's now worth $2.50. I don't think it's going to go any higher than this. So I'm going to go ahead and sell my slices for someone else to buy. But you are able to sell it now for $2.50 a slice because it's now worth more. And so you make a $2 profit off of each slice that you bought into. And that is one of the ways you can make a profit in the stock market. I'll go ahead and cover a lot more in depth into what those ways are, like what other ways you have to make money in the stock market. But that's the general idea of how to make money in the stock market. When most of us think of the stock market, that is what we think of doing. We buy a share or a slice of that company, and then we, wait for it to go up, and then we sell it off for a higher price. So at the same time, you can lose money in the stock market. So let's use this example of, let's say that we had also bought some of that pepperoni pizza as well, but doctors and hospitals and well-known universities come out and say that for each slice of pepperoni we eat, we're shortening our lifespan by a year. And so all of a sudden, that $1.75 pepperoni pizza is now only worth 25 cents. Well, we bought into it at $1.75, but we're like, oh, well, snap, pepperoni pizza's bad, let's go ahead and sell that. Well, we can now only sell it for 25 cents a slice. So we've lost $1.50 per slice in our money because it went down. So there is that danger in the stock market. You kind of have to do a little bit of research and figure out, well, is this going to be a, something that's going to continue to go up or not? Most of the time when you see the stock market, it's going up and down. It's not consistently going up, but you're wanting it where when it goes up, when it's going up like this, how we typically see it on graphs, that even though when it reaches here and it comes back down, when it goes back up, it's going higher than where it was before. Or it's going back to where it was, and then, it'll drop down again, and then it'll go back to where it was, and it's kind of stable like that. Those are kind of some of the indicators that you are looking for when you are buying into a stock. Now, there's other things that help a stock be stable, and one of those is when they pay out dividends, and I will cover that in a later video. I just wanted to mention that. But yeah, that is the two ways that you can either earn or lose money in the stock market. And obviously there is a lot more ways and a lot more things that goes into the stock market. I wanted to just kind of keep this simple and basic, try to help you understand what the stock market is. If it's still a little bit confusing, go ahead and leave a comment down below with your question, and I will do my best to answer that in upcoming videos. I really want to make this next series educational one to help you understand what the stock market is, and also help me learn more about the stock market, because I'm still a beginner. I've only been in the stock market for not quite a year now, so I'm still learning a lot. And not only am I learning a lot by researching for these videos, but I want to help you, to all those who are new into it or have never invested, to help you guys understand as well what the stock market is a little better. So if you liked what you've seen so far, go ahead and hit that thumbs up button. And if you want to learn more about all things financial and the stock market, go ahead and hit that red subscribe button to be notified when a new video is going to be released. Also, leave down below in the comments, suggestions you might have or questions you might have that you want answered as well, not just about this video, and I will do my best to get videos out to answer those questions as well. So it was great going over this with all of you. I really did enjoy looking up this, how to kind of explain what the stock market is. And I will see you all in the next video. Keep life epic.